Hello, and welcome to TradingQB.com. Sign up today for a free 3-day trial of our stock picks. Also, stop by and check out our chart analysis and pick up your TradingQB book. Also, soon to come is Trader Audio. And as always, our strategies are free. Today's video, I'm going to show you a very simple technique that professionals use for entry and exit timing. This technique is called market symmetry. Market symmetry is exactly what it sounds like. It's symmetry, or equal distance among price waves. In simplest terms, it's the difference between the high and the low of a wave. When you measure wavelengths, you'll notice they are very similar, and this is the edge that you can exploit. Let's take a look at this 5-minute crude chart. What we see here is the market is up and to the right, meaning the bulls are in control. So the question is, when can we expect a market to pull back? Let's measure the most recent wave from top to bottom. Now we'll take the length of the previous wave and place it on top of the current wave to get an idea as where we expect the pullback to begin. Maybe 55.40s. If you're a scalper, maybe you'll take the smaller waves. Or if you're a trend trader, maybe you'll take longer waves. Okay, so now we have an idea where the pullback might start. Now we can measure the length of a typical pullback to give us a price target to enter long. We can say this might be a typical pullback, and I want to turn it green as to stay organized and know this is where I'm buying. Look at that. Takes us right about 55.04. We're in the middle of this sideways action. Now, again, depending on what kind of risk tolerance we have, you can measure from this very top and be more aggressive, these old sideways action that could serve as support now. Or, personally, I take the average of this sideways move, somewhere in there, right below the 55s into the old support area. Using multiple wavelengths is the best part of this technique. If you're a counter trend trader and want to sell this market, you're waiting for a large upward move. However, to buy this bull market, we only need a smaller pullback move as an entry long. Sometimes you can sit here, stack the book, and get a nice little scalp trade. Other times, you might want to wait for an actual entry technique to get in. I personally use this technique because it keeps me out of trouble and stops me from taking impulsive trades. Helps me frame the day and allows me to sit back on my hands and wait to get a solid entry. Now that you know what we're looking at, let's take a look at how well this technique actually works. Going up for the bottom to top, pull back here, we remeasure. The sideways action, I usually reset. So if we put at the bottom of the sideways action, you can see right here is the high, and we did get a pullback. Now this is half a wave. The other half would be down. So pulls back in this half of the wave, it's a reset. Make this a little straighter. And it didn't quite get there. So we can expect it to be a little weaker and have a substantial pullback. Substantial being in relationship to this up move. See, it pulled back between the 50 and 618 of this move. Pull back. Now because we have a new wave, we'll do a new measurement. We'll measure sort of right there. I'm going to discount this. I'm going to measure the most recent wave up. Now move it to this pullback. Here you can see, putting the lows, and this is exactly where we got a pullback. A little easier to see a little pullback here. So, because it worked, we'll keep it intact. Here, the market went up, but didn't quite reach our target. And then we went into a sideways action. So, this is where, again, depending on what type of trader you are, if you're an aggressive trader, we're going to take it from this very fake break lower and puts us right up here to the high. If you're like me, I do the average. Let's say, because I'm risk averse, I missed this counter trend trade. So what is this telling me that it didn't reach my target is that what? In relationship to this one wave, the market is weak and we can expect a pullback. So on these pullbacks, I can measure these pullbacks now. We'll make this green so everyone knows it's a pullback and that's where we want to buy. And now because it's weak though, we know the pullback might get a little bounce there. Or because it's weak, it can go double and expect a decent pullback down here. In relation to maybe Fibonacci's of this whole wave, it puts us right here just above the 50% pullback. Or if you're not as risk averse as someone like me, anything below 5507, I'm looking for an entry technique long. Most of the charts I post, you'll see some type of symmetry in it. That's because this technique is used on any product on any time frame. So whether you're a day trader or swing trader, go ahead and give this technique a try.
This has been another free trading strategy brought to you by TradingQB.com. TradingQB.com is your go-to place for free trading strategies, stock picks, and coming soon, Traders Audio. Follow us on Twitter for live market commentary, stock analysis, and great offers. Please subscribe to, and also please subscribe to our YouTube channel to keep these strategies free.